Hi, guys. Would you please turn to page 72 of your textbook? I'm going to try to help you with problem 2A5. That's the one, if you checked my email out, it was conflicting in the learning guide, but corrected, and the assignment is problem 2A5. So I thought I'd give you a hand and get going on it anyway. Remember, the first thing I want to point out to you is this is a comprehensive problem and very valuable. That's why am emphasizing its importance. Now, when you go down to your bottom of your Excel sheet, you'll see that there's instruction 1 and 2, which shows you the T accounts, where you're going to record the transactions. And if you click 3, you'll prepare your trial balance on that form, and it follows through. It is from the trial balance that we go ahead and prepare the financial statements. So you'll see that we would prepare the income statement first. Then if you click 4B, there's a form for your income statement. I'm sorry, your owner's equity statement. And then if you click 4C, you'll see the balance sheet. Okay, so everything is formatted for you, and I'm going to get you going. You really should follow along. Look at the textbook. You see the chart of accounts there. They list the assets, liabilities, the owner's equity accounts, the revenue and expenses, and they all have a number and a label. Cash is account number 111, and so on and so forth. You can see right here. So those T accounts that you see here were adapted from the chart of accounts from your textbook. Now you read on, and Annis's Delivery Services completed the following transactions. Now you remember that for every transaction there has to be at least 2 accounts affected by each transaction, and we must record an equal amount of debits and credits. So the first transaction you would analyze and ask yourself, what are the 2 accounts? And we'll say that there was $29,000 of cash. So in that cell, you'll type in A, and then you'll type in 29,000. You don't have to put plus and minus, because you know that assets are increased with debits. So I'll just hit enter, and you know the other account would be her capital account, and we'll find her capital account down where? There's her withdrawals, receivables. There she is. Okay, so again, let me capitalize, cap locks. Okay, so A, a couple of spaces, and then you're going to credit that account, and you know the owner's equity account is increased with credits, and you just hit enter. Okay, and you'll see that you have your debit and your credit recorded equally. I'm going to just back up here and put the capital A in. Okay, so that's transaction A. I read on transaction B, bought delivery trucks on account for $12,000. What accounts are affected? What direction are they going? Up, down? Well, if you're buying delivery trucks, you got more delivery trucks coming into the business. Delivery trucks is an asset, something that we use, that we own, even though we haven't paid for it yet. And you know the rule is when you need to increase an asset, you will put the increase on the debit side of the account. So here I am putting a debit in there for $12,000. I hit the enter. Now it does say that I am purchasing the delivery trucks on account, which means I'm buying now and paying later, and therefore I have to add to the accounts payable account for $12,000. So I'll just stick my $12,000 in there and hit enter. Read C, bought office equipment for cash. You got one asset going up. Put a couple of spaces there, and the amount is $600 I'm reading. So I'll just put the 600, hit the enter button, and then go up to the cash account and put transaction C there and space over a little bit, put my 600 in there. Now you know that you just reduced the cash account. So if you had to calculate a balance, you don't need to, but if you were keeping running balances in a regular formal type account, it would be 29,000 minus 600. So at this point, you'd have 28,400 as a balance. Transaction D, paid advertising expense for $650. Okay, so we ran an ad in a local paper or whatever. Hopefully we got some calls on it. That's the idea. You're using up cash here in order to try to earn revenue, and that's essentially the nature or the definition of an expense, the using up of an asset or possibly incurring a liability in order to help chase revenue. So we're going to add to the advertising expense account. And you know that these expenses are going to be subtracted from the revenues when we do our income statement. But you got to have a debit that's going to add to the advertising expense. And then in D, okay, give it a couple of spaces, and we want to credit cash in order to reduce cash. As you know, cash is an asset. The rule is we debit to increase and credit to decrease all assets. So there's a $650 credit there. Simply hit enter. Go on to the next one, transaction E, collected cash for delivery services rendered. So I'm going to make an addition to cash. It's transaction E, if I'm correct. Okay, and give yourself a couple of spaces and add the $2,300 cash, 2300, and you're all set with the addition to cash. You've just increased an asset, so you're actually on the other side of the equation, and that increase in assets is derived from the activity of earning a revenue and getting paid right away, so that we will stick the E in there. Okay, give yourself a couple of spaces, and we have just added $2,300 to our revenue account, which ultimately will cause owner's equity to go up, provided that there are more revenues than expenses, which we calculate on our income statement. Driver's salaries is an expense in the next one, which is transaction F, as in Frank. Okay, so we're going to move over there, and the amount of those salaries is $600. So we're gonna throw the $600 in the salaries account. Hit enter. Are you paying cash? Well, that word paid is a trigger, okay, that you're using up money right now. It's transaction F. So you come over, and as I said, you give yourself some space there, and $600 is entered in there. Again, you've made all along we make equal debits and credits, and we increase and decrease through debiting and crediting. Here you know that I'm adding to the amount of the expense, and I'm again reducing cash for a payment that I've made. All assets, don't forget, add, subtract. Let's move along. We'll get you through this and come back with another one, okay? Transaction G, gas expense for trucks, $1,600, account number 512, transaction G. And normally these are dated, as opposed to keyed by letters. We enter transactions by date typically, and certainly you'll see that when we get into Chapter 3, when we record these transactions in the general journal, which is really in reality the first place that this stuff gets recorded. We're using T accounts to learn our debits and credits. You'll see in the next chapter, and I will have something for you, where you would first journalize and enter by date and write out the account title that is to be debited, and then later on you'll go to the account and post it, the $1,600 in this case, to the appropriate account. That's the way it's done in practice. We journalize first, and then we post to the ledger second. So there's my debit to gas expense for $1,600, and it says paid. All right, so that again we're still in transaction G. All right, so that we're going to stick a G in there, space over, and the reduction to cash of $1,600. We've got equal debits and credits recorded. Transaction H, important. This is a sale on account, a credit sale. We are not getting cash, but rather we're going to get paid later. So we come to the asset, accounts receivable, and we want to stick a debit in there that is an asset, which will be increased by the $1,700. And you know, when it's collected, we debit cash and credit accounts receivable. We just add it here, and we have to, of course, come to the other side of the equation and show that the owner has earned that $1,700, so that would balance the equation, and it would render an equality of debits and credits recorded in the accounts. So here's your H, and the amount is 1700, and then we click enter, and then telephone due but unpaid. Well, what that means is that we've incurred the expense, but we haven't paid for it. Well, you still got to record the expense because you did use up the telephone service during the period, and the principle of accounting states that we must match the expenses against the revenues earned in the same period, whether we pay it or we don't pay it. If we've incurred the expense, we record the expense. And if we're not paying it right now, we owe for it, so we have to balance it with a credit to accounts payable. Let me get this in here. So there's your I and your debit for $200. And then you come over to accounts payable. All right, so that's transaction I. So what you're seeing here is an additional $200. What you're seeing here is an additional $200 credit to accounts payable. So now you owe $12,200. Is that correct? I think so. Now, very important, and an area which causes a lot of confusion is transaction J. Now, the guy that we, in H, you recall, we rendered the service. We debited accounts receivable and credited delivery fees earned. Well, you have already recorded 100% of the revenue related to that transaction. So there's no way that you're going to stick that $250 as additional revenue, because you'd be overstating revenue. All you're really doing here is shifting out of accounts receivable into cash. So it's into cash, transaction J, for 250. Okay, so the guy is paying us on credit. So we're collecting, which means we add to the cash account. And obviously, if he's making a payment to us, he's going to owe us that much less. So in transaction J, we come over and reduce the account receivable by $250. So now the guy owes us 17 minus 250, which I think is 1450 if we were going to extend a balance at this point. And finally, Avery withdrew cash for personal use for 300, so we have to hit her withdrawals account and put in the letter K. That's adding to the withdrawals account. Later you'll learn that it will serve to reduce the owner's equity account. Particularly, you see it now when we do the owner's equity statement. We subtract the withdrawals, but you'll see it happen in the ledger also when we do our closing entries. I think in Chapter 5 that the withdrawals account, the amount in it has to be closed out and subtracted directly from the owner's equity account itself in order to update the owner's equity. Okay, my friends. Now I can. What do we got here? 16 minutes. All right, so what you would do at this point is you would get the balances in these accounts. I have the solution in front of me. I show 29, 23, and 250. I see 600, 650, another 600, 1600, 300. That's cool. So I got them all correct. So what I would do here is I think I can maybe put an underline under that one without screwing it up. Let's try, because Excel is where the heck is my underline function here? Bold, it's usually right there. I'm not seeing it. Okay, doesn't matter. Okay, so anyway, what we do is we add the total debits and we add the total credits. Now I'll come down here because we want them side by side. So if I added 29,000 plus 2,300 plus 250, unless my author is wrong here, we should have $31,550 on the left. That's not the balance. That's simply the sum of the debits. And over here, we get the sum of the credits, which should add to $3,750. Now, how do you get the balance of an account? You can obviously see that there are more debits than credits. So to get the balance of an account, you want to subtract the smaller amount from the larger amount. The larger amount is a debit. Therefore, you're going to have a debit balance, and that would be, according to my solution here, $27,800. Okay, so you have your balance in the accounts, in the cash account. You do the same thing over here. You don't have to drop any totals. The balance in accounts receivable is a debit, obviously, of $1,450. You don't have to indicate the balance because there's only one entry there. Same here. The balance is 12. 1,600 is the gas expense. I have to simply add these two, which would come to what, $4,000? Looking at the revenue account. Yep. So you just stick in 4,000. You could write the word balance if you want, but it's not that essential at this point. So there you are with your $400 balance there. And I believe we don't have to mess with any of these except the accounts payable account, which now has 12,200. Okay, so there's your completed ledger. These are all going to be carried over to the trial balance. So now what you need to do, okay, what you need to do is to take all of these balances, okay, I can label it if you want me to, but that would be the what? That would be the BAL, okay, of 2,700. 800 rather, and that's the amount that would go over to your trial balance. I can't seem to back it up, but that's okay. So that again, that's the account balance, BAL. So I'm writing the word balances in here. Obviously, oops, 600. Is there an undo? Where's the undo? Where the heck's the undo here? I don't want to spend too much time. What was that? 600, kids? All right, office equipment 600, and that was letter F. Sorry. Okay, so again, you can write balance, 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 but you know these are the amounts that are going to go to the trial balance. So you're going to list out where. You're going to go to page 3, right? And you're going to list out cash on the debit side. I'm going to start you with that, and maybe I'll come back, but you should be fine. So when you do your trial balance, you list your cash account, and here's where these they didn't really format this in a very friendly manner, so that you have to mess with these columns. I'll probably screw it up myself. 27,800. You have to play with each. You have to individually enter the digits, which is really asinine. But that's the way Pearson and company did it. Okay, and I know it could cause a headache because typically you'll just type an amount in a field and you'll be all done. Here you've got like 1, 2, 3, 4 fields, and you can leave the pennies blank. All right, and then of course if you went back, so that's in the trial balance. If you went back, the next account that you'd list is the accounts receivable, which has a debit of $14.50. Okay, 22 minutes. Oh my God. All right, well, let's just do it, and I hope you're staying with me. How much was that again? $14.50. So I'll come to my trial balance. I'll list accounts receivable. And the amount was $14.50. Again, it's a pain in the arse. Okay, 1, you have to click in there. 4, you have to click in there. 5, and you have to click in there. 0. Okay? Anyway, that's the deal at this point. I'm going to leave it to you to finish that thing off. Your check figure in your trial balance should be 45,200. 45,200 when you finish that trial balance. And when you're done with the trial balance, you're going to go to this sheet and do your financial statements, the first of which is to do your income statement. The check figure there is $950. $950 is your check figure there. You can jot that down. 950 is your net income. Revenues of 4,000 minus expenses of 3,050. And then you're going to do your owner's equity statement, your beginning owner's equity, plus your net income minus your withdrawals and so on to get your ending owner's equity. And then you do your financial statements. You list all of your assets here. Cash, accounts receivable, you got a couple of types of equipment, total assets, and your liability, all you have I think is accounts payable, and then you take your owner's equity from the owner's equity statement, and at the end of the day, A equals L plus OE. So this is long enough. I hope that you use it. If if you have any questions, I think I can save the doc here. So I would save as Slater 12V problem 25A, whatever REV means, I don't know. But what I do before I submit, like you do, when the problem is done, I would suggest you save it on your desktop as an Excel workbook sheet, and then once that's saved, you're ready to when you're ready to submit it. Obviously, you're gonna find it. All right, let me get out of here. You're gonna find that. Here it is, right here. Okay, so that's you can see that the only thing I completed was the T accounts. Okay, and I started you off obviously with the trial balance, and you're going to finish it. You've got your check figures, and again, when you need to submit that, if you don't already know, you'd have to go to where are we here? The North Shore, and log in. I'll probably get an error here. Oh, I got lucky. Okay, and then you go to My Courses, you go to Blackboard, right? And Essentials of Accounting, that's us. We go to Lessons, right? We go to Learning Modules. And if you when you go to Module 2, right? Submit problems, textbook problem assignments, 2A, so you click on that, and what you do is you attach, right? Browse my computer. Where did I put that? I put that on my desktop, so I'd have to go searching for it. Did it lead off with Slater? SLATER? Yeah, there it is right there. Okay, so you search for it. If you start typing in, if you remember what you entitled it, it should pop up. So that if I wanted to submit that, I open. Okay, so there's one. If I wanted to attach another file, I go back and get it. I'm not going to attach anything, but let's just say I wanted to. Let me just get something that makes some sort of sense here. All right, there's the old balance sheet. Okay, so if I wanted to submit that, of course yours would be another problem. You just click on it, right, and click open. And as you see, you put it on the back of the truck. And then when you're ready to submit it to me, you got all your 3 problems here. You just come down and click submit, and then I will get it in my folder over here, and it would be ready for grading. Well, that's 28 minutes. I know it's a long time, but if you just, play it in parts, that's fine. Come back, repeat it. I don't know where it's going to go, okay, because I'm on my instructor page. Okay, kids? All right. I hope this came out okay, and there's no way you should ignore this because I want to help you out here. So that's it.